A recent TikTok video is suggesting that Index Universal Life could be the next 401k. Take a listen.
Forbes recently published an article. Could the IUL be the new 401k? It's a great question. In today's market, with inflation, tax rates increasing, we don't know what the tax rates are going to be 5, 10, 15, 20 years down the road. Our 401ks are tax deferred, but you can leverage life insurance for income and create generational wealth.
Okay, this influencer says that unlike a 401k, an IUL can help you combat inflation, rising tax rates, and create income and generational wealth. In today's episode of Fibs of TikTok, I'll debunk this claim once and for all. All right, two things can be true at once here. An IUL can help you accomplish all of these things, and it can also be the case that it should not be the only facet of a balanced, comprehensive approach to tax-free retirement planning. A 401k should also play a robust role in your retirement strategy, particularly if it's a Roth 401k. All right, let's break down the importance of the Roth 401k. If you're contributing to a Roth 401k, you will be well equipped to combat inflation. According to Forbes, from July 2012 to July 2022, the S&P 500 generated an average annualized return of nearly 11% with dividends reinvested. After accounting for inflation, you're still looking at about 8.3% average annual return. So can the stock market help you stay ahead of inflation? Undoubtedly. And here's the best part. You can grow the stock portion of your retirement portfolio within your Roth 401k. It's one of the very best places to do it. Okay, let's talk about his claim that we're in a rising tax rate environment. Is this true? Absolutely. I've been beating this drum for the last 15 years of my career. Due to massively unfunded obligations for Social Security, Medicare, Medicaid, and interest on the national debt, experts are predicting that tax rates will have to rise dramatically to keep our country solvent. Former Comptroller General of the federal government, David Walker, even predicted in his best-selling book, Come Back America, that taxes will have to double by 2030 to keep us out of bankruptcy. So while his claim here isn't just wanton fear-mongering, we should ask ourselves the question, is the IUL the only way to protect ourselves from the impact of higher taxes? Of course not. The Roth 401k was created for the express purpose of shielding you from the impact of higher taxes down the road. You can contribute $22,500 per year if you're younger than 50, and an astounding $30,000 per year if you're over age 50. So just like the IUL, you're contributing after-tax dollars, and you're growing those savings tax-free over time. Okay, let's address the subject of income. Here he seems to be suggesting that the IUL is the only way to address the issue of sustainable income in retirement. This isn't true either. For example, let's say you invest in a Roth 401k and a Roth IRA every year between now and when you retire. By day one of retirement, you will likely have accumulated millions of tax-free dollars in your stock market portfolio. You could then roll a portion of that portfolio into an annuity that guarantees a tax-free income for life. Picture this, a retirement where every year you wake up with an inflation-adjusted tax-free stream of income that's guaranteed to last as long as you're on this side of the grass. In the meantime, you leave the balance of that stock market portfolio in the stock market, and because that guaranteed tax-free annuity is covering 100% of your lifestyle needs in retirement, you now have a permission slip to take more risk in the stock market portion of your portfolio. That means the possibility of even greater returns over time. But if that guaranteed lifetime income annuity is covering your lifestyle, what are you going to spend the stock portion of your portfolio on in retirement? I cover this well in my best-selling book, Tax-Free Income for Life. You're going to spend it on discretionary expenses. There's two kinds. Shock expenses, these are unexpected expenses that might include out-of-pocket medical costs, housing repairs, family expenses, and maybe even a change in marital status, and aspirational expenses. These include the costs of travel, gifts to families, hobbies, boat purchases, country club memberships, or other retirement splurges. And here's where the IUL really comes into play in retirement. You'll use your IUL to pay for those discretionary needs during a year in which your stock market portfolio is down, which will be 2 to 3 times every decade. Remember, because the IUL is immune to stock market risk, it's the perfect vehicle from which to take tax-free distributions during a down year. This in turn gives the stock portion of your retirement portfolio a chance to recover before you start taking further distributions to pay for those discretionary expenses. All of this means that your stock portfolio will have a much greater likelihood of lasting through life expectancy. You see, the IUL becomes a sort of volatility shield that extends the life of all your other investments. I address this concept in my best-selling book that's aptly entitled The Volatility Shield. Keep in mind that the IUL is also a great way to mitigate your long-term care risk. If you get your IUL with the right company, they will allow you to receive your death benefit in advance of your death for the purpose of paying for long-term care. And if you die peaceful in your sleep 30 years from now, never having needed long-term care, someone's still getting a death benefit, probably your kids or your grandkids. So there isn't that sensation of having paid for something you hope you never have to use. Okay, let's keep watching.
The four main banks in the country combined total $50 billion in life insurance. So if the banks can do it, why can't we?
Okay, this is an argument I often hear on TikTok. Banks are using cash value life insurance to meet their goals, so we can too. Listen, what he's referring to here is called bank-owned life insurance, or BOLI, and it's utilized completely differently than how you and I might use cash value life insurance. Here's how banks use it. They buy cash value policies on their key executives. When those key executives die, they can then use those death benefits to help fund their employee benefit programs. Because that death benefit pays out tax-free to the bank, they can put less money into these employee benefit programs along the way. But here's the key. These banks only benefit upon the death of that key employee. What this TikToker is touting are the living benefits of life insurance, not the death benefits. So it's like comparing an apple and an orange. Okay, let's finish this thing out.
Albert Einstein once said, compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. Start the new year off saving right.
Compound interest. Okay, IUL is not, of course, the only account within which one can experience compound interest, and it isn't the right way to invest. IUL is merely one of multiple streams of tax-free income that may play a role in your retirement picture. It's most effective when coupled with Roth IRAs, Roth 401ks, and a limited balance in your IRA or 401k, the RMDs of which can be offset by your standard deduction in retirement. And if you keep your provisional income low enough, then your Social Security can also be tax-free. In conclusion, no, the IUL is not the next 401k. It is merely one facet of a balanced approach to tax-free retirement. You still need your 401k, particularly if it's a Roth 401k. Not only is it a productive way to grow tax-free wealth, but you're typically receiving a company match as well. And remember, as of Secure Act 2.0, that match can be directed towards the Roth 401k portion of your account. That's free money that will accelerate you towards your financial goals. So yes, the IUL is a critical component in your tax-free retirement plan, but it isn't the only component, notwithstanding TikTok videos to the contrary. Okay, folks, this concludes episode 3 in my ongoing Fibs of TikTok series, where I expose the half-truths, lies, and exaggerations about index universal life insurance. By the way, if you're planning to put out a misleading IUL video of your own, beware, my next video may be about you. If you want to learn more about how the IUL fits into a balanced, comprehensive approach to tax-free retirement, be sure to check out my tax-free toolkit. You can download it for free at taxfreetoolkit.com. If you're a financial professional and want to learn how to become a certified Power of Zero advisor, head over to powerofzero.com and opt into my free 3-part video series. By the way, if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally, and don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.